Well, here we are. Into 2022 we head. 2021 was an interesting year to say the least, but a new year brings new opportunities, brings new trends and new factors of the market that we have to consider. Today we're kickstarting January 2022 with 3 companies to watch in this month up ahead. Each of them have either got tailwinds behind them on a sector level, or they've got potential upcoming news flow and catalysts that are attracting ASX investor interest. Before we do dive in, if you do enjoy this video, don't forget to hit the like button. If you're new here, welcome. Make sure you've subscribed and turn your bell notifications on so you don't miss any of our daily episodes. For those who are interested in the Brainchip story as well, make sure you stay till the end because we'll be having a little bit of a discussion about what the Mercedes announcement could mean and some further implications for that story too. Let us know what your stocks to watch for the month of January are. Drop in a comment. Let us know what you're watching. And of course, as you know, I'm just a guy who likes talking about stocks on the internet. I'm not a financial advisor. None of the stocks we cover are buy recommendations. These are all just general discussions to be a starting spot for you to do your own research from. So up first, Renascor Resources. ASX RNU is a company that's looking at developing a graphite project centered around their Sivia graphite project. They have a mine, but they're also looking to move downstream as well and ultimately produce a PSG product ready for use in battery graphite anodes and ultimately that will go into electric vehicles. We all know about the fascinating sector tailwinds that really drove the broader EV battery supply chain in 2021, but a lot of that interest centered around lithium. Though of course a rising tide did lift all ships, there has been a lot of focus and attention over this upcoming period about some of the other EV battery materials and how they could go over this next year and beyond. So as we discussed, the Renascor discussion centers around this sector-wide uplift. There's been a lot of attention at the moment on the broader EV battery supply chain. Of course, lithium had many of the gain throughout 2021, but I think investors could start to look at what are some of the alternative materials within that EV battery supply chain that maybe didn't run as hard in 2021, that still have the opportunity for uplift. Graphite, as we know, as a current state of play, has traditionally actually been used as an industrial mineral. However, of course, the EV use cases for graphite as part of the battery anode is continuing to grow. It's the fastest growing segment of graphite use case, and this is where a lot of the attention is. And Renascor provides themselves with the opportunity to get exposure to these trends by going downstream and producing that PSG product ready for use within battery anodes. As we can see here, the anode demand forecast is going to continue to grow. We've also seen an uplift and some price signals in the graphite prices over this past period. And this is why there's been a lot of attention not only on Renascor, but a range of other companies as well. We just as easily could have been having a discussion surrounding RNU Resources, who of course recently formalized their agreement with Tesla for their graphite. Could have discussed a number of other companies too, but RNU is a fascinating one that has been getting a lot of discussion. And I think just building on that discussion, of course, we know about the growing demand, particularly for downstream production of PSG or synthetic graphite ready to go within battery anodes. We also know there is a focus on diversification of supply chains and localization of supply chains around the world. A lot of the downstream production at the moment is centered around Asia, but particularly in China at the moment for ultimately graphite and then battery anodes. And there is this focus on localization of supply chains to build resilience into supply chains. We know there's investment in Europe. We know there's investment in North America. These nations, these regions are looking to invest heavily and build out their own EV battery supply chains. And of course, as a result of that, they're looking further abroad than just Asia, where they originally sourced a lot of their materials to help to build out this resilience. And this is where Renascor is hoping to feed into it. They're located within a tier 1 jurisdiction in Australia. And along with that as well, they were also granted the major project status. This, of course, is a significant opportunity. It recognises the strategic significance of the Sivia project, but along with that as well, it helps them with the development of their project, provides them with support from different government agencies, and it's a big tick of approval, as well as the validation of what the Renascor project with Sivia could bring to the national economy in Australia. And so I think just having a think about the Renascor strategy, as I've mentioned, they're not only in the upstream mining process, but they're looking to go downstream as well, producing that high purity PSG focus. They've got solid economics and looking at being one of the lowest cost producers in the world. They actually do have one of the largest resources in the world as well, the largest resource outside of Africa. So you can see here, they've got a staged process. Stage 1, commence PSG operation, ultimately look to expand manufacturing of PSG, and they're focusing and investigating the opportunity to scale this at the moment. And then ultimately, as they continue to scale, look at the full Renascor potential. As mentioned, they've got a huge resource. They're in a tier 1 jurisdiction, and they do have that support as well. So they'll look to continue to go further downstream and see how they can leverage their processing expertise as they build out the first 2 stages of their process. And so I think just wrapping that all up together, Renascor Resources recently provided an update through an announcement that stated some really good results in terms of some initial discussions. Higher yields and higher prices was really the key takeaway from it. They delivered higher yields for their spherical graphite, which was higher than their initial studies, which of course is a big positive. And also they exceeded their lithium-ion battery anode purity specifications as well, which has attracted a lot of interest. In terms of where Renascor's positioned for 2022, they're going to continue further doing their engineering work, also looking at the opportunity to scale their expansion. They've got 4 offtakes at the moment, including most notably with POSCO. And at the moment, their stage 1 is already subscribed. And so they'll be looking at the opportunity to continue to be able to scale that and to be able to provide more graphite to those end users who are seeking it to build out their battery anodes. Ultimately, the focus for Renascor over this next period is moving towards their final investment decision and then ultimately looking to move into construction and production, as many of these projects are looking to come online over the next few years. Stock number 2, Lithium Power International. ASX LPI is developing their Maricunga project, which is located within the Lithium Triangle in Chile. We know that this is a significant area where there's a lot of lithium brine projects, but Lithium Power International are actually reaching quite an interesting upcoming moment. Towards the end of January, they'll be looking at bringing out a revised DFS. There's a lot of eyes on the LPI story as a result of this, and they're looking at being a nearer term producer. They're uncommitted at this stage. They've got a proven reserve as well. And they've also had some recent uplifts in terms of their resources and reserves. They updated their both measured and indicated resources with a 90% increase for stage 1, which of course has attracted a lot of investor interest in the ASX LPI story. The Maricunga opportunity for Lithium Power International, it's well advanced, it's fully permitted. They'll be using renewable solar energy as well, which brings down their carbon emissions, and it ultimately means that they've got quite a green focused project. And along with that as well, they do have 2 other projects in Western Australia, which are in the exploration stage on the hard rock side. The final notable discussion surrounding Lithium Power International, which we'll talk about later on in this discussion, is surrounding their strategic alliance with leading global player Mitsui, which has gone some way to de-risking the project, and of course it's validation to the opportunity that Mitsui see in the Maricunga project. And so just a bit of a quick update in terms of Lithium Power International and where they're currently positioned. As we discussed, they provided a latest drilling program update. They've got a JORC resource update, which gives them a 90% increase in terms of measured and indicated stage 1 concessions. And ultimately, they'll be looking to bring their project online in terms of a stage process. So there's further opportunities for updated scale. They've got this updated DFS, as we discussed. It was originally slated for December in 2021. It's now been pushed back to January 2022. But this is where a lot of the attention is going on for LPI. They're continuing to work towards finalising financing, of course, but the Mitsui agreement puts them in good stead for this, and it provides them the opportunity to have a bit of a leverage in terms of their negotiations and discussions. And importantly as well, because they're uncommitted, they have the opportunity to be exposed to some of the upside in terms of the significant uplift that we've seen in the lithium prices over this past period. And obviously investors will be looking for potential offtake agreements and what that could mean for the story moving forward. The company, as you can see at the bottom here, have highlighted that they're aiming to be one of the first carbon neutral lithium producers in South America. We all know how important and how much of a growing importance there will be for manufacturers about sourcing their supply from ESG focused offerings to help them bring down their total embodied energy, and LPI are hoping to feed into this opportunity. As we discussed, Lithium Power International have got 2 other projects as well, lithium exploration projects in Greenbushes. We all know about the Greenbushes area and, of course, the opportunity that different resources have there. And then the Pilbara project as well. It's worth noting these are still in the very early stages, but they are progressing work there. And it does provide them with that opportunity to potentially capture some more upside as the lithium sector continues to grow in demand if there's successful results coming through from this. So it is something to watch for investors. And so just bringing this discussion back to the Mitsui Memorandum of Understanding, this MOU is with Mitsui, who are one of the leading global players in the space. There's a range of different benefits. Firstly, it surrounds offtake. So Mitsui have the option to purchase up to 15,000 tonne per annum from stage 1. They also have the opportunity to participate in funding. And there's a range of different future opportunities as well, contingent on expansion surrounding finance, offtake and funding, if Lithium Power International does continue to expand their Maricunga project. I think what's also interesting as well in terms of some further longer term opportunities with this discussion is there will be further collaboration surrounding direct lithium extraction technology testing, and ultimately if that could flow through, we know that DLE has been attracting a lot of investor interest recently. If you look at companies like Lake Resources or Vulcan Energy as well. So if there was DLE processes implemented or the opportunity for that with LPI, it'll be fascinating to see the investor attention that would be paid to that. And so ultimately bringing it back to why investors are really paying attention to the ASX LPI story at this stage. As mentioned, the initial DFS update, which was planned for December 2021, has now been moved into mid-January 2022. If you think about some of the dynamics that would ultimately have the opportunity for some uplift compared to their DFS a couple of years ago now, firstly, the resource obviously has had an upgrade, but also the lithium prices. We're all familiar with the lithium uplift that really had that price signal. The back end of 2020 in November, it started to move upwards, but has really gone from strength to strength over this past period. As you start to plug in some improved numbers, both on the resource side as well as the lithium side for the pricing, obviously there's a lot of interest about what that could mean for the MPV and the project. And that's what investors are really looking for with the DFS that will be updated over these coming weeks. There's not long to go. There's been a lot of focus for this for ASX LPI. We'll be keeping eyes out on what this means for the story. I know that Lithium Power International is one that's been requested and discussed a lot on the channel. We finally got around to it, so hopefully you enjoy this discussion. I'm keen to know your thoughts on where LPI head from here. And then stock number 3, AVZ Minerals. ASX AVZ have got one of the largest lithium resources in the world. They truly do have a significant resource, which is high grade as well. And upcoming in this next period, there's a lot of eyes on the AVZ opportunity as they move towards a mining license, which has been stated to be in the final stages of progression, and ultimately the opportunities that will flow through from that in terms of satisfying some condition precedents for some other agreements that they have, as well as ultimately moving towards that bankable feasibility study and a final investment decision. As you can see here, some of the high-level numbers for AVZ Minerals, their projects located in the DRC in Africa. At the moment, they've completed a DFS for 4.5 million tonnes per annum. They are looking at an expansion opportunity up to potentially 10 million tonnes per annum. They obviously have a huge resource. The resource is 400 million tonnes at 1.65% and reserves of over 100 million tonnes, which of course is pretty significant to say the least. And just building on that, you can see here in a bit of a comparable basis, AVZ Minerals Monono project in the DRC. It's a high grade. You can see it's in and above that 1.6% mark. But in terms of size of resource, it truly is a mammoth resource. You can see here, just in comparison to many of the other resources that you might be familiar with, or many of the other companies on the ASX you might have had the chance to have a look into, it truly is unparalleled compared to the majority of them potentially on a size dynamic too. AVZ as well, like many of the developers, are also considering the opportunity and the options to go further downstream, particularly with their location as well. This will help them reduce the amount of product that will be necessary to ultimately consider transporting, and as well it will help them capture more of the value chain too. So this will be fascinating. It's something worth noting over this upcoming period as they continue to develop the Monono project out. A couple of notable events since the last time we discussed the AVZ Minerals story. They raised $75 million. This was raised at the institutional and sophisticated investor level. It was raised at 50 cents per share, but obviously since the past period, there's been significant uplift to the AVZ Minerals share price since this raise was done. If we have a look at the use of proceeds, it obviously gives them the opportunity to negotiate from a strong cash position, the opportunity to further undertake some early works program, obviously the transport and infrastructure piece as well to continue to develop that side out, progressing various technical studies, negotiating the final project financing requirements, and necessary working capital as well on the corporate and administration side, while also considering any exploration opportunities. And a previous agreement as well, which we have discussed, so it's important to the AVZ Minerals story, was this agreement with Cath. We know that they earned a 24% equity interest in terms of their investment. They paid $240 million cash for their equity interest. But along with that, they have agreed to fund their pro rata portion of funding for the development of the Monono project. This transaction will contribute up to and above $400 million US, but it has some condition precedents that do need to be met. These condition precedents predominantly center around a range of different approvals, but also the mining license. As you can see here at the bottom, there was an extension in terms of the condition precedent date for finalisation. That's been extended to the 28th of February 2022. And this is why it's attracting a lot of investor interest at the moment in the AVZ Minerals story. The AVZ team are working alongside the DRC government, finalising the mining licence as well as the collaboration agreements. There's about a month and a half, 2 months to go until these need to be met. And so obviously there's a lot of attention about what this could mean as they are finalised and the flow-on effects and implications for the AVZ Minerals story. Because once they get those ticked, it goes a significant way to de-risking the project, and then obviously they can continue to focus on the commercialization and ultimately moving towards construction. And so having a look at some of the upcoming catalysts for the ASX AVZ story, as we can see here, obviously the mining license award and the consequent FID have been pushed back into Q1 2022, but those are upcoming soon and they're attracting a lot of attention. There's also further discussions and continued investigation into the opportunity for uplift in terms of the expansion study, potentially from 4.5 million tonnes to the 10 million tonne per annum. This would be a major uplift, and of course it would really attract a lot of investor interest into the AVZ Minerals story, because that would be production of some globally significant scale. Along with that as well, as we did discuss, the mining license award would enable AVZ Minerals to transform their DFS into a BFS, a bankable feasibility study, and that ultimately flows through to opportunities in terms of finalising the finance and then ultimately moving towards construction and then production in 2023. So there's a big year and a half upcoming for AVZ Minerals, but a lot of near-term catalysts as well in the first quarter or first half of 2022 that we'll be watching out for. And so finally, I just wanted to end with a discussion surrounding the Brainchip story. ASX BRN has definitely been another stock to watch in the month of January in 2022. But we've provided a number of different discussions already in separate videos, which you can check out on the channel after this one, if you wanted more of a broad overview about what's happened with BRN and why there's been so much attention on it. But I did just want to bring it back down to one discussion surrounding the Mercedes announcement. Does it actually matter? I know there's been a lot of comments recently about the fact that it's just a concept car. Is it even going to get into production? There's been no revenues attached. But I think there is one useful way that we can think about this and potentially have a bit of a discussion about what this Mercedes news could actually mean for the Brainchip story. Before we dive into that, if you did enjoy this video, don't forget to hit the like button. Feel free to share it out as well. If you're new here, make sure you've subscribed and turn your bell notifications on. We drop daily videos each and every day, and we'd love to have you join the community. And if you are interested in a broader discussion surrounding the Brainchip story and the commercialisation opportunities and implications that this Mercedes news could mean, let us know with a comment and we can look to bring that out over the next few weeks. And so then I guess bring it back to that discussion. Does the Mercedes announcement matter? As we know, Mercedes announced their Vision EXQQ, a concept electric vehicle, at CES. So CES is the Consumer Electronics Show. It's one of the largest trade shows in the world. It's held in Las Vegas each and every year, and it's truly the opportunity for retailers, electronics companies, leading brands across sectors to present their newest, brightest, and most exciting technologies to stakeholders, potential customers, and really to the world. It has a huge amount of eyes on it. There's countless articles and videos and reports produced on it, and it's the opportunity to show off what you're really excited about. So Mercedes unveiled their Vision EXQQ and announced that they would be leveraging Brainchip's Akida technology within it. And so as we mentioned, there's been discussions. Hey, this is just a concept car. Does it actually matter? There's no revenue attached to it. But I think to answer that question, we have to think about what is a company in Brainchip's current position trying to focus on. Of course, if you just think about a conventional company, maybe they're looking to add on incremental revenue. You make your first deal, you've got revenue from that, then you make your second, and then you just add on revenue bit by bit by bit by bit. And it's quite a linear progression. It makes sense, but that's what you're trying to do. But I think for a company like Brainchip, it's following, as we've discussed previously, the trajectory of much more of a US technology firm, where there's heavy investment in the early stages. You're really focusing on R&D and developing a top-of-class technology. And then once you do that, your focus is not on revenue, dollars and cents, and profitability in the early stages. It's on customer adoption and bringing market awareness to your product and the opportunity that it can bring. And ultimately, once you get your chips or the IP into a number of products, it is going to sell itself if successful, and if your product is good enough that it provides a step change to the products that you're contained within. Well, why is that? We live in a competitive marketplace. We know that all of the sectors are competitive landscapes. Of course, all of the top CEOs, the top chief technology officers, they're looking at all of their competitors and what they're doing. How are they getting that final % of benefit or that final opportunity that maybe we haven't been getting? And so if they see that there's a new technology that someone else is leveraging that they haven't been exposed to yet or they haven't laid eyes on, well, this could be the opportunity for them to investigate, to see, okay, is there an opportunity that maybe we could incorporate this into our product? Otherwise, if we stay stagnant and we just let our competitors continue to push ahead, we've conceded a competitive advantage. And maybe our customers who might have previously wanted our car or our fridge or our iWatch or our drone, they might go to our competitors because they're getting benefits that we are no longer able to provide. And so with that knowledge and context then, to think about the CES unveiling of the Vision EXQQ car by Mercedes, There's really three distinct options that I can see that would have flown out from that. And it's not about revenue. It's not about dollars and cents. It's not about profitability. It's not about commercial agreements. I think there's three opportunities if we're thinking about the automotive sector more broadly. The first opportunity, or the first option, is that nobody saw it. Mercedes unveiled their Vision EXQX, one of the potentially most transformative vehicles that have been released in the electric vehicle space, and nobody saw it. Even though there was 55% of registered attendees who were senior level, over 200 of the Fortune 500 companies registered, and there was over 180 plus automotive brands who committed, showing record growth, there is the possibility that maybe no one laid eyes on the display by Mercedes, even though they are one of the leading global household brands, and they unveiled one of the most significant transformations in terms of concept cars for electric vehicles in the world. So that's one option. Nobody actually saw it, and they all missed it. Maybe they had their eyes closed for the entirety of the display. And then I guess a second option, that is a possibility, though I don't think it's that feasible, but it is an option as well, is that the automotive industry is maybe not competitive. Maybe all of the leading brands in the world are not seeking out the opportunity to improve their cars and to try and compete with their competitors, but maybe they're comfortable conceding competitive advantages and allowing one of the leading household brands like Mercedes to announce the product, to announce that they have been able to provide a step change in terms of what they're able to offer, but they're not going to follow up and see what they're using, because maybe they are not actually in a competitive marketplace and they're not too worried about the fact that Mercedes may get a competitive advantage or a jump on them. But of course, we know that Mercedes did mention it, they announced it, and they didn't have to announce it. If they are announcing it, it's because they firstly believe in the Akida technology, but they're also proud of the technology and what it provides, and the opportunity that neuromorphic computing could unlock for Mercedes moving forward, and their other cars and products. And so then I guess if we don't think that the first two options are realistically actually what's occurred, if we believe that at least some of the automotive manufacturers and the automotive executives in the world watched the Vision EXQX unveiling and paid attention to it, and if we do believe that the automotive industry is competitive and most of the companies within the space are probably going to chase up new technologies that have been unveiled to see if there's opportunities for them to implement it, as they don't want to concede that competitive advantage, well then it only leaves option 3. And that is that the technology has been validated globally. Mercedes has unveiled that they are proud and they are excited to be using Brainchip's neuromorphic computing technology with Akida, and there probably is, it's fair to say, other automotive manufacturers in the world who are at least investigating and considering what Akida is, if not trying to chase this up to see how they can get their hands on Akida and to see if there's opportunities for them to integrate it with their own technologies. Who knows what it is? Of course, the market is made up by different interpretations, different perspectives on it all. But I did think it was worth noting that it's not always about dollars and cents. It's not always about revenue or commercial agreements at this stage. For some sectors of the market, sometimes it's about brand awareness and scale, because once a snowball starts going, the product can end up selling itself, particularly in competitive spaces, which is exactly where Akida will be primed for, because there's a lot of consumer types of products that they will be unveiled for, and these manufacturers will be seeking to produce the best product that they can. And then I think there's another dimension on top of this as well, in that Brainchip is not selling the Akida chip on a one-by-one basis to product manufacturers. They have also got companies that will be on-selling Akida to their customer base, whether it's Megachips or potentially Valeo or any of the other companies that are out there. It definitely makes it a heck of a lot easier if you are able to say, hey, we have got this technology product, and not only do we have this technology product, but it's actually been used in Mercedes. Mercedes has validated it and they're excited to use it. You can imagine how that would perk up the ears of potential producers and manufacturers saying, oh, if this is good enough for Mercedes, it's at least worth us having a bit of a think about. And so I think this is where the real opportunity is. It's not in the dollars and cents initially, because that will come if ultimately the product is good enough. And if it's good enough for Mercedes, well, then there's going to be other manufacturers around the world that will consider that it might be good enough for them as well. It's going to be a fascinating time. January 2022 is shaping up to be an exciting start to the year. And of course, it looks like the year is going to be another exciting one, with plenty to watch on the macroeconomic front, as well as this economic recovery that looks to be continuing on. Obviously, the central banks have got a bit of work to do in terms of navigating the move out of crisis time, ultra-loose accommodative monetary policy, and we'll be watching to see how they're able to navigate this. Hope you enjoyed this video. Thank you so much for joining us. For now, stay well and happy investing.